first of all, what gives with the action from Friday's terrible sell-off to yesterday's complete turnaround and now today a resumption of what looks like a pretty broad-based decline?
Right. In a way, it's the volatility that's the issue. And it's also every third day we get that rebound, which is to say hope is still alive. And there's nothing wrong with that. But it means you never really get the cathartic sell-off. You never get the capitulatory type conclusion. And so let's take the small caps. I mean, Russell 2000 has been in and out of a bear market, however you want to define that, 20%. It's not about that. It's the equities have been topping for quite some time. And we also have, and I think this is important, a bifurcated market. And the history of bifurcated markets is not good. So think about this. We have extreme strength in certain stocks, certain areas of the market. Think about how strong energy has been, materials, steel, aluminum, precious metals, consumer staples, utilities, all up and to the right. And the exact same time, we've had extreme weakness in biotech, just gets worse, and technology and semis and retailers. And so when you have a spread like that, there is the thought that the strong stocks have it right, that energy is leading the way, and that the material stocks are right, and the weak ones will start to bottom. But bifurcation actually ends the opposite way. The strong start to crack. We're seeing that now. Metals and mining are cracking. Energy is cracking. A lot of the steep run up in certain staples is starting to give way, and the weak get worse. And so we're starting to see that kind of unfolding. I think there's more downside. There's more stress ahead, and it's just a time to postpone most all new buying.
Well, I don't really like this message. You know, this is a very difficult one.
Well, I mean, obviously, free choice. Everyone can do what they want, but I mean, there are some times where you can just maybe. We do have expressions in the English like "let the dust settle," right, or just stand aside. I think that's a moment like this.
It's interesting what you say about leadership, though, because definitely people have been looking to the market and saying, OK, fine, if I stay away from, high PE tech, the overall market's held up fine. If I get into energy, if I get into some of those ports that you mentioned, maybe I can ride this out. What would your sort of, I don't want to say advice, but the way that you look at the setups here, could this dynamic be changing somewhat?
Well, so, I mean, the playbook, right, if you can call it that, on page 1 says, obviously, you go defensive. And there are people who don't have a choice, right? You are, by mandate, fully invested. You're running a fund. You can't hold cash. And so it's not random that Coke is doing well. It's not random that Walmart is holding up certain, to a large extent. So that the defensive trade is always there. But then it gets to when you do have a choice. Do you have to? And you were asking that just the prior guest, do you have to put money into Google right here? This is actually a time, I think, where you should avoid the temptation to say, I've got to get in, I've got to do something. Sometimes sitting on your hands is really the best thing.
It's different from last cycle where for that kind of 10-year period while the Fed was doing QE and the economy was quite weak, we kept getting these sell-offs, these dips that were so short, and then the rips would be so extreme that it was almost like if you didn't buy the day that stocks bottomed, and who knows at the time, you would miss the 5% move before you knew it. Why is now different?
Right. And so it depends on whether you're in a bull or bear phase, right? So if you're in a long and protracted ascent, and we've been in it depends how many years you want to measure it, dips are counter trend moves in an ongoing uptrend. But see, the question now is, are we still in an uptrend? Dow theory, and this is important, right, which goes back 100 plus years, the MSCI All Country Transportation Index, it peaked on May 10th. That's almost a year ago, meaning it's never confirmed the move since then in the rest of the global equity market, which is to say, and it's a long answer, I don't think we're in an uptrend. And so then the counter trend moves are these up moves, which should be faded. And buying the dip is wrong.
So last question, is this a time frame that people need to wait it out? Is it contingent on what the Fed does here? What kind of gets us to the end of this downtrend?
Well, you bring up maybe the most salient point of all. It is about time. And so could it be that after the great excess of the past 2 years, it's been a very impressive move since the COVID low, whether it's government induced or not, but it's been impressive. Is this now, this stall, this churn, simply the pause that refreshes, or is it more of the stall before the storm we roll over? Let's say we don't know. Let's hold that aside. Either way, I would say 90% of the odds are captured in sideways or down, that 10% only
is
that we somehow go higher from here.
All right. Well, I really appreciate it. I mean, sort of, but I do because
thanks for having me.
A more cosmic sense of what's going on here is helpful, especially on days like this. Carter, we appreciate it.